Profit. The markets remain firm. The Sensex and the Nifty have a gain of 0.25% coming through and are trading in the green for majority of the day. So far, the markets have been doing decently. Reliance Industries and ITC are two heavyweights on the Nifty, and they're playing spoil sport today. But the Nifty is still managing to keep its head above the water, and we are seeing gains coming in, though marginal at this point in time. Tata Motors, Bharti Infratel, ONGC are the biggest gainers, and like I said, ITC and RIL are being a drag. We have with us Jinesh Gopani, Head Equities at Axis AMC, who's joining us from Mumbai. Jinesh, thanks so much for joining us on NDTV Profit. Now, as we start 2017, what should investors look out for if they invested in equities? All through last year, we've seen strong flows coming in. Maybe they will continue this year as well. But should return expectations be moderated? What would be reasonable inflation-adjusted returns that investors can expect this year?
Yeah, hi. Happy New Year to you and your viewers. From the market expectation, I think, as I've been already saying, that you are in some kind of an uncharted territory, especially due to demonetization impact and its effects, till what time it will be there. And on the global side, you have US interest rates and the new president coming into place. So going forward into next 3 to 4 months, you will have events which will further unfold. Budget becomes very important for giving sentiment booster to the economy for India, and that would decide the perception of the Indian citizen, how they take it, this demonetization, and how fast the consumption pattern comes back. So from the market perspective, though listed companies tend to gain after the effects of demonetization and GST, we'll have to see how fast the demand comes back. Our assessment is that at least till February end or March, you will see some kind of a slackness in the economy, with growth rates being challenged and might be down or maybe just 5 to 10% up. So budget becomes very important to give booster to the sentiment of the Indian consumer, and hence till March we see a volatile period. Also, don't forget there is a EM versus DM trade which is going on, and you have huge amount of outflows also coming from last November onwards. So how that will have its impact over next 3 to 4 months will also decide the markets, how they behave. Our sense is that from the return perspective, if a GDP grows at 7.5, and inflation is around 4.5, that is what the expert estimation is, then I think anywhere around 3 to 4% more than that you should be expecting in terms of returns. However, it can be back-ended than the front-ended if you take the calendar year.
All right. Then Jinesh, what is the level that the Nifty range that you're looking at? And even if the returns are back-ended, will there be opportunities for investors to enter, and good opportunities to enter, and hence see those returns that you're talking about during the next calendar year, this calendar year?
Yeah, so if you see, this demonetization will have its impact on the companies who are listed or unlisted. You will see numbers coming out from 12th or 13th of Jan, and you will really see who is able to navigate this phase in a better manner as compared to the others. So it will become a very stock specific kind of an approach for the market. And as it is, if you see, India has always been a bottom up stock pickers market. So if you are in the right stock, I think the returns can be good. However, if you go into the trap of a sector or a subsector which is getting impacted because of all this slowdown because of demonetization, then I think you will have to pay price for it. So we are very cognizant of the stock what we are buying, and if we are able to navigate this phase in our portfolio in a better way, and the companies are able to again come back to, let's say, 10, 15, 20% kind of a growth trajectory, and then going on to second half at 20-25% growth trajectory, then I think we are better off in those kind of stories.
All right. So, do you see dips in the Nifty which will offer good entry points? Maybe not across the board. There will be some sectors that will do better. When should investors look at buying, and what should they look to buy?
I think it is very difficult to give you that whether it will correct by 5% or 10%, or maybe it might remain at this level for a slightly longer period of time. So net, as I'm telling you, any dip should be used as an investment opportunity, keeping into mind how the budget comes, how the UP election comes into place, when GST comes.
All right. But amongst the sectors or these stocks that you think could be insulated from this demonetization effect, can one look at buying now itself, or should they wait? Because you said returns will be back-ended.
Yeah, so see, most of the sectors are impacted in some or the other way. So we have to be very careful. We have to see how this December quarter number goes by. What is the commentary of the corporate in terms of how badly they are impacted, or how smoothly they are riding this wave. Also, March quarter then becomes further of importance because budget is around the corner. What kind of incentive soaps comes in form of the budget, whether the corporate tax rate is brought down, whether the income tax rate is reduced. So all these are very I would say very tricky issues to deal with when you are looking at the investment in a particular sector. I think it is more stock specific than even sector specific now, because we feel that men will be separated from the boys, and the companies who have a long trajectory of delivering numbers, understands the business cycles well, will come out of it much faster than the others.
Then can you give us some names where you think management pedigree is very strong, they'll be able to ride the business cycles, their entire model is strong, where investors can look at investments?
Maybe I would not like to go into stock specific names, but let's say if you take NBFCs, there would be some NBFCs which will get impacted by 5-10%, where there would be some other NBFC which will get impacted by 30-40%, depending on the business profile they have and what kind of growth they have registered in last 2-3 years. So it will be very, very stock specific, and if we are into the story where the growth is down by 5-10% and can come back very, very fast, and because of the agility of the management, the kind of business model they have set up, I think we would like to be in those kind of stories.
Right. Recently, Jinesh, we've seen that a lot of NBFCs have seen a lot of correction, whether it's MFI, housing finance companies, a name like M&M Finance. Do you think that their long-term model may not change much, or the way they operate may not change much? That's why the bounce back would be found fast?
So as I said, demonetization is kind of a shock in the system, and everyone is trying to grapple with it in terms of how much impact they would have had in their business model. See, frankly, if it is just a 3 to 4 month kind of a phenomenon, things will come back very fast. If this gets slightly accentuated, then there is some kind of a problem. So as per the experts, if you see, some people are talking about 12 to 18 months kind of a pain in the economy. So when your economy is in pain, then it further becomes really very important for companies or the managements to be very, very careful in terms of going for growth or going for stability of the business model. So I would say, if it is just 3-4 month kind of a thing, many good businesses will come back by March.
You know, till 12 months back when we spoke to you, you said that one of the key things for NBFCs is that rates in the system are coming down. Now when the rates in the system are coming down, names like HDFC, names like LIC Housing, they are correcting. Why? How have things changed in the last 12 months?
So again, if you see, it's the growth which is got impacted because of this demonetization thing. So let's say a company was growing at 20%. Suddenly in December quarter, they would have shown they will show a disbursement growth of, let's say, 10%. And going into March, if things don't come back pretty fast, then again they will be at 5 to 10% disbursement growth. So entire thesis of growth, which was being articulated with lower cost of borrowings, is to some extent, I would say, stopped for the time being. So again, as I said, if it is just 3-4 month kind of an pain, I think it is better to take that pain but remain invested in those companies, because they can again bounce back very fast.
Right. And about the rates going down in the system, whenever the growth rate picks up, this lower cost of funding will benefit NBFCs the most?
Yeah, I think it should benefit, because the deposit accumulation which has happened in the banks, ultimately banks will have to lend in some or the other way, and one of the biggest sector to lend in form of borrowings was borrowings to the NBFC, borrowings by NBFC. So if the cost of funding for a bank is coming down, obviously it makes sense for them to go lower the cost of interest, and it helps NBFCs in terms of getting the borrowings at 30, 40, 50 bips lower than what it was, let's say, 12 months back. So I'm sure they would be benefiting. However, as I again said, growth should come back fast.
Right. In terms of, banks, do you think banks are better placed, at least on a tactical basis, for the next 6 months? Downside in banks would be limited versus non-banking financial institutions?
Again, tricky to say. Banks are more stable. They have a large base of CASA, which helps them in terms of navigating this ALM mismatches pretty well. However, NBFCs have the borrowings versus the lending what they do. So the ALM mismatch might be slightly higher than the banks. However, again, even the growth will get impacted in banks as well. So we'll again have to see which bank is able to manage its asset quality and grow better than the market.
Right. Last time we spoke about pharma, and you were, decently bullish considering the valuations. But, you do not want to go and take a very big overweight call. With what has happened to DVs, and I know that you cannot comment on stocks, but that is a big risk which the market is not factoring in. Even for a company like DVs, which has, history of about 20 years, their plant was never expected to get any FDA problem. That risk is something which valuations are not factoring in.
Yeah, I think to be fair, that risk has increased substantially than what it was, let's say, 12 months or 24 months back. The kind of 483s observation which are coming for various companies and the kind of interpretation which is going now seems to be pretty serious as compared to what it used to be, as I said, 12 to 24 months back. So we have to be cognizant of the fact that the stringency of the US FDA should not be ignored as a passing thing, because it can lead to 2 to 3 years of pain for the company, which we have been seeing for some of the other pharma companies. So despite being bullish, I agree to your point that US FDA thing has become more serious in terms of companies getting more stringent letters as compared to what it was earlier.
Right. And how would you build into this risk? Do you think valuations need to derate further?
See, again, it all depends company to company at what kind of growth trajectory they are in US, and how important is a particular facility for them as regards to 483 observations. So obviously, it's not a good sign. So there will be some valuation derating also will come in, and also given the protectionism around the world and the kind of let's say DOJ pricing issue and all those things which are coming up again in US will have its own further negativity in the stock prices. Having said that, most of the stocks have also corrected pretty well. So I would not say that it is means you should be not buying any story or anything like that, but it is just that you need to be patient enough and get more hang on what could be the real implication of all these issues which are being raised in US.
Right. Can you just talk about that pricing issue again? It's a very unknown sort of a event. What happens to US pricing and generics over there? And that's why big bets, big buying from big funds like you would not happen?
So it is more of protectionism. So if there is a agency which is suing the company in terms of increasing in the prices, what the company would have taken over the last 2-3 years, depending on the demand supply situation, and if that has gone into legal court and if there is a outcome which is against the company, then they could end up paying heavy fines for it. So that also nowadays we have to take into account what could be the potential risk if a company is increasing the prices in US, and that might be a business decision in terms of demand supply, but what if this kind of issues prop up and there are heavy fines on the company?
What do you do with IT in that situation? Valuations over there are not demanding, plus the growth outlook is subdued. Do you think there a positive surprise is possible?
Maybe more of a tactical trade, I would say. Longer term, there are issues even in that sector, mainly from growth perspective, mainly from technology disruptions which are happening in the form of artificial intelligence, smart cloud and all those things. You have Googles of the world who are bringing in new and new innovation in terms of technology. The cost arbitrage of an employee, which was the main theme of India in terms of technology sector, is fading away. Then you have new US president which will come out with its own policy in terms of H-1B visa and the local hiring. So all this will have its own impact either on the growth or on the margins. Though these companies are very, very strong in their balance sheet, the growth is a challenge for them. So it becomes difficult to give a blanket view on the technology sector. Times are tough for them because on the one hand the growth is not there, and on the second hand there is a significant amount of pricing pressure on the existing contracts, and hence the margins are under pressure. So it will be a very fine balance which the companies will have to do to report both top line as well as bottom line growth. Having said that, these companies are sitting on huge cash flows. So I think ideally these companies can dole out huge dividends in payouts if they don't need so much cash on their balance sheet except for acquisitions, and that is what some of the US companies have done it. So if that happens, then I think people would be ready to buy if the stocks are available at 4, 5, 6% dividend yield with let's say 7 to 8% kind of a growth trajectory.
Just a word on the auto pack. Last time we did not speak about auto, but this time around we have the December numbers which the auto industry has already reported. What do you make of the initial numbers that have come in? Again, very mixed, very difficult to take a view as to what the trend will be.
Yeah, again, if you see some of the passenger car players have not reported very bad numbers. However, the two-wheeler industry on a whole has reported slightly bad numbers. But again, it's a very short-term phenomenon. When my team is doing channel checks, they are already getting vibes that the momentum will come back. Month on month, you would start seeing improvement as the cash in the system starts improving, especially in tier 2, tier 3 cities. So, as I said, again, it is not. It is very difficult to conjecture the 2 month numbers. I think more important would be month on month if there is a improvement in the sales, and especially with lowering of interest rates. I think by Feb end or March we will get a real picture of whether this is a permanent disruption or destruction, or it is just a temporary phase and things are back to normal.
But even if for an auto company, what you were saying for IT would be true. So again, just taking an example of maybe any large cap two-wheeler names, they don't have any debt, they have sufficient amount of capacity, they have a great brand name, it's a free cash flow positive company. So after a point of time in correction, they would start to look attractive?
They are already looking attractive from where they were. So again, if they improve their dividend payouts because of the strong cash flows, and I don't think they need so much money for the capex front, obviously it makes a great opportunity to invest in those stories. Plus you have some kind of a growth which will come back in April, from April onwards. So let's say if a two-wheeler company grows at 8 to 10% in volume, and let's say 10 to 15% in the profitability with huge dividend payouts, I think it becomes a great buy.
And the rate cut that we just spoke about, the aggressive rate cuts that we have seen, what will be the impact on banking sector? NBFC is unknown, but it will definitely benefit auto and auto sector. Whenever historically we have seen rates going down so much, demand for auto tends to increase?
As of now, I think the rate cuts have been more, in the recent days, it will be more towards mortgage lending rates. However, you will, because the cost of funding is coming down, you will see further rate cuts in the auto related segments, which is very, very helpful to kickstart the economy as well.
Right. Till now we've spoken about sectors which markets have been overweight on or markets have tried to research. Just any contra bet that you have, maybe real estate, maybe telecom, maybe any other sector which is beaten down, nobody wants to look at it. Anything looking interesting?
So I think OMCs were looking interesting, though to be fair, I don't have in my portfolios, but my colleagues would be having in some of their portfolios. So that was looking interesting and cheaper, and given the deregulation. However, even there you have now an issue propping up in terms of the private players entering, again trying to enter this place in a big way. So we will have to watch out this space very carefully. And also the oil prices which have been moving upwards. So till what time it would be comfortable to keep it deregulated as a sector itself is a question mark. So that was looking a bit interesting given the valuations and the deregulation theme which was playing out. Apart from that, nothing in telecom as such or in real estate.
Jinesh, thank you so much for taking out time for us. Always good to get in the perspective. That was a mutual fund view coming in. Jinesh Gopani of Axis Mutual Fund saying that returns can be back-ended, but over a long-term period, returns would be made from the current levels.